Imagine a world where your returns are not just impressive but downright staggering. A world where your investment grows exponentially, catapulting your initial stake into a realm of remarkable profits. Is it a flight of fancy or a potential future thanks to the power of the microsector's FANG plus 3x leveraged ETN? We'll see. Envision a portfolio that thrives in volatility, turning market fluctuations into opportunities and setbacks. Imagine a compound annual growth rate that isn't just solid, but absolutely breathtaking, reaching heights that many only dream of. Picture a portfolio that, despite its roller coaster nature, delivers a risk and return that is as favorable as it is lucrative. This is not a mere illusion or a far-off dream for some. This is a reality that many investors are beginning to tap into, leveraging the power of the microsector's FANG plus 3x leveraged ETN to their advantage. Stay tuned as we dive into the performance summary of this extraordinary investment opportunity. The microsector's FANG plus 3x leveraged ETN has shown a significant increase in value over the past 6 years it has been around. Let's delve a little deeper into the numbers. With an initial investment of $10,000 mushroomed to a whopping $117,072, demonstrated by the backtest. That's a pretty penny, isn't it? Now let's talk about the compound annual growth rate, or CAGR. It stands at an impressive 60.99%. This figure reflects the annualized growth rate of the investment over the period we're looking at. But what about volatility? Well, the standard deviation, which is a measure of the volatility of returns, is high at 92.09%. This indicates that there have been significant fluctuations in the portfolio's value over time. The portfolio's best performance saw a return of 438.10%. On the flip side, its worst performance resulted in a drawdown of negative 88.47%. This highlights the volatility and potential risks associated with the investment. The maximum drawdown, which represents the largest peak-to-trough decline in portfolio value, is negative 90.14%. This shows the extent of loss experienced during the worst-performing period. When we look at the Sharpe ratio, a measure of risk-adjusted return, it stands at 0.94. This suggests that the portfolio has generated a favorable return relative to the level of risk taken. The Sortino ratio, which considers only the downside volatility of returns, is 1.78. This indicates a relatively strong risk-adjusted performance. Lastly, the portfolio's correlation with the market is 0.77, suggesting a moderate positive correlation with broader market movements. As you can see, the performance of this investment is impressive, but like any investment, it comes with its own set of risks and potential rewards. Now let's delve into the holdings that make up this ETN. At the helm, we have Tesla, making up 10.48%. Innovating in the electric vehicle market, Tesla continues to be a game changer. Next, we have Broadcom, comprising 10.26%. This global infrastructure technology powerhouse is a strong pillar in this portfolio. NVIDIA, the graphics processing titan, accounts for 10.06%, followed closely by Snowflake, the cloud-based data platform, at 10.02%. Retail giant Amazon sits at 9.97%, while Meta Platforms and Alphabet, the parent companies of Facebook and Google respectively, each contribute 9.90%. Apple, a household name in technology, chips in with 9.88%, and Microsoft, a pioneer in the software industry, adds 9.80%. Lastly, we have Netflix, the streaming sensation, rounding off the list at 9.73%. These powerhouse companies are the driving forces behind the returns of this ETN. Like any investment, the microsector's FANG plus 3x leveraged ETN is not without its risks. It's essential to understand these risks before diving in head first. Let's break them down. First off, potential conflicts of interest exist. The issuer and its affiliates, for instance, play various roles related to the issuance of the notes. They act as agents, have a say in calculations affecting note value, and are responsible for hedging obligations. Profits made from these hedging activities add to the compensation received for selling the notes, which could potentially incentivize sales. Next, we have the call right. This means that the issuer can choose to redeem all outstanding notes whenever they see fit. If this happens, you might find that the redemption amount is less than the principal amount of the notes. Even if you have the stomach to work through the drawdowns, it doesn't mean the Bank of Montreal will. Then there's the minimum redemption amount. Investors must redeem at least 25,000 notes unless otherwise determined or bundled with other investors' notes. This requirement could potentially limit liquidity. Another risk is the irrevocable redemption election. Once you've elected to redeem your notes, you can't change your mind. This is a decision that requires careful thought and consideration. Also, it's important to note that investing in the ETN is different from owning the index constituents. The returns may not match and could be lower. Uncertain tax treatment is another risk. The tax implications of investing in the ETN are not entirely clear, and changes in tax law could impact your returns. When investing, there's always the potential loss of principal. If the ETN performs poorly, you could lose some or even all of your initial investment. Lastly, there's the risk of loss due to fees, which is 0.95% annually. These fees can eat into your returns, and over time, they can make a significant dent in your investment. Investing always carries risk, but understanding these risks can help you make informed decisions. In conclusion, the microsector's FANG plus 3 X-leveraged ETN offers an exciting investment opportunity. With powerhouse holdings, staggering returns, and an understanding of the risks involved, it is a compelling prospect. This is not financial advice, and consulting a financial advisor is important because they would be able to know your specific situation. Remember, the key to successful investing is knowledge, understanding, and a willingness to take calculated risks. Thank you for joining us, and please subscribe for more insightful investment analysis.